Bull Bear Buzz podcast for decoding markets, fueling minds. You're here because, well, you want to cut through the noise, right? Understand what really matters, get those key insights.
Exactly. Quick, but thorough.
That's what we do. So today, we're diving into the financial heart of Wipro Limited.
Yep, we've got their latest consolidated financial statement, Q4, and the full fiscal year ending March 31st, 2025.
And we've also got the press release, the earnings call transcript, the regulatory filings too.
All the good stuff.
Our mission here is basically to pull out the essential financial intel, the strategic moves, give you those, aha moments without getting totally bogged down in every single number.
Okay, let's do it. Where should we start? Profitability.
Yeah, let's start there because what jumps out immediately is that gain in profitability.
Right. Net income up 6.4% in Q4 compared to the last quarter.
And the full year picture, even better.
Yeah, 18.9% year-over-year growth for the full fiscal year. That's pretty significant.
It really is. It suggests maybe a successful shift to higher margin stuff. Or maybe just really tighten the belt on costs.
Could be either, or both, especially when you consider the revenue picture, which we'll get to. It wasn't exactly booming.
Right. And it's not just the bottom line number. The margins themselves are getting better.
Full year margin, 17.1%. That's up 0.9%.
And Q4 specifically, even more expansion.
Yep, 1.1% year-over-year expansion in Q4, hitting 17.5%. So yeah, getting more profitable per dollar of revenue.
So they're becoming more efficient, it seems, even with maybe some revenue challenges. The big question is, though, how sustainable is that?
Well, that is the key question, isn't it? And another piece of evidence supporting their financial health is the operating cash flow. It looks really strong.
Okay, tell me about that.
In Q4, it was, get this, 104.4% of net income.
Wow. So more cash generated from operations than profit reported.
Pretty much. And for the full year, it's even higher, 128.2%. That's almost $2 billion in operating cash flow for the year.
So it's not just profit on paper. They're actually bringing in the cash.
Exactly. It's a great sign of, financial stability and the actual quality of those earnings.
Okay, so profit strong, cash flow strong. Let's look at the top line now. Gross revenue.
Right. Q4 gross revenue came in at $225.0 billion. What's that in dollars? About $2.63 billion.
Okay. And gross-wise?
Modest, 0.8% up from the previous quarter and 1.3% year over year. So some growth, but not huge.
And this is important, if we drill down into just their main business, IT services, the picture changes a bit, doesn't it?
It does. The IT services segment revenue specifically was $2,596.5 million.
And that was
actually down 1.2% quarter over quarter and down 2.3% year over year.
Okay, so a decline there. What about constant currency? Does that smooth things out?
A little, but still down. The non-GAAP constant currency number for IT services, that also decreased.
Yeah.
0.8% quarter over quarter and 1.2% year over year.
Interesting. So the overall slight revenue increase must be coming from somewhere else.
Yeah.
Maybe IT products or currency movements, even though constant currency adjusts for that.
Yeah, that divergence is definitely something to note. Suggests the core engine, IT services, faced some headwinds, while maybe other parts or factors helped the overall number nudge up slightly.
All right, let's dig into some specific balance sheet figures. March 31st, 2025 versus the year before. What's shifting? Trade receivables first, money clients owe them.
Okay, trade receivables. Slight increase. Went from about $115.5 billion to $117.7 billion. That's roughly $1.4 billion in 2025.
And unbilled receivables, revenue earned but not invoiced yet.
Also up. From $58.3 billion to $64.3 billion, or $753 million.
Okay, so more money tied up in receivables, both billed and unbilled. What could be driving that? Longer payment cycles, maybe?
Could be, or just the timing of larger projects finishing up. But what's interesting is contract assets. Those actually went down quite a bit, from nearly $20 billion to about $15.8 billion, or $185 million.
And contract assets represent work in progress, essentially.
Yeah, work done, but not yet meeting the criteria to be recognized as unbilled receivables. So a decrease there might mean they're converting work in progress to billable status faster.
Which kind of fits with the increase in unbilled receivables we just saw.
Possibly. Now, on the other side, the Special Economic Zone Reinvestment Reserve, that saw a big drop.
How big?
From $42 billion down to about $28 billion, or $325 million. That's often tied to tax benefits, so maybe changes in regulations or how they use those zones.
Could be. Now, what about shareholder equity?
Equity attributable to the company's shareholders grew nicely, from about $750 billion to nearly $828 billion. That's $9.7 billion in 2025.
Solid growth in equity. But I noticed their non-current borrowings also went up.
Yeah, loans, borrowings, bank overdrafts, the longer-term ones increased from around $79 billion to almost $98 billion, or $1.15 billion.
So total liabilities also rose then.
They did, from $401 billion to $456 billion, or $5.3 billion, and the whole balance sheet, total equity and liabilities, grew to nearly $1.3 trillion, or $15 billion, up from about $1.15 trillion.
So a bigger company overall, funded by, well, both more equity and more debt.
Yeah, it seems like a strategic mix, maybe funding growth or just managing their capital structure given market conditions.
Okay, let's connect that back to the income statement for the full year. You said profit was up significantly, but what about revenue?
Full-year revenue was actually down slightly, from $897.6 billion in FY24 to $890.9 billion in FY25, which is $10.4 billion.
A slight dip in revenue, but
A big jump in profit. Like we said, profit for the period surged from $111 billion to $132 billion, or $1.5 billion.
and that profit increase really shows up when you look at earnings per share, right?
Absolutely. Basic EPS jumped from 10.44 to 12.56, that's $0.15.
And diluted.
Similar story, up from 10.41 to 12.52, or $0.14.
So even with that tiny dip in overall revenue, profitability per share got a serious boost.
Yeah, it really underlines that focus on maybe more profitable deals or just really tight cost control.
So how are they doing it? Achieving this better profitability when revenue isn't exactly soaring.
Well, the strategic highlights and what the leadership said gives us some clues.
Right. The CEO, Srini Pallia, he mentioned closing the year with 2 mega deal wins
Mega deals, yeah. That sounds promising.
and increased large deal bookings overall, growth in top accounts too. But he also tempered it, saying clients are still cautious, macroeconomic uncertainty.
So it's that classic mixed picture, strong wins in specific areas, but the overall market's a bit hesitant.
Exactly. But those large deal booking numbers, they're pretty eye-popping.
What were they again?
48.5% year-over-year growth in Q4 FY25.
Wow, nearly 50% growth in large deal bookings in one quarter.
And for the whole year, still very strong at 17.5% growth year-over-year. And remember, large deals for Wipro are $30 million or more in contract value.
So a clear strategy there. Go after the big fish.
Seems like it. Does focusing so much on these huge deals carry any risks, though? Like relying too much on a few big clients, or maybe sales cycles get longer.
That's definitely a potential trade-off. You get big rewards, but maybe higher concentration risk.
And the CFO, Aparna Iyer, her comments really backed up the margin story.
Right. She highlighted the operating margin expansion, 110 basis points year over year for Q4.
And 90 basis points for the full year. Just to remind listeners, a basis point is 0.01%.
So significant improvements, even with, as she put it, a softening revenue environment.
She also said they aim to keep margins in a narrow band going forward. That sounds like disciplined management.
Yeah, investors like to hear that kind of focus on preserving those profitability gains. Suggests discipline in operations, pricing, maybe focusing on those higher value services we talked about.
One more thing on the financial side, the dividend.
Yes, they declared an interim dividend of euros earlier in the year.
And that's going to be considered the final dividend for the fiscal year 2024-25.
So returning some value to shareholders, which is always good to see.
Okay, now let's get into those strategic deal wins. Because these often give us a real peek into where the company's headed. That Phoenix Group deal in the UK sounds massive.
Yeah, 10 years. For Life and Pension Business Administration for their Reassure business, that's a huge long-term commitment.
And the scope sounds really broad.
Totally. Policy admin, claims, customer service, data, compliance. Wipro's handling a lot. Plus, they're modernizing Phoenix's core platform, the ALPHA platform.
Modernizing
AI, automation, cloud, digital transformation, the whole buzzword bingo card. But seriously, it's a major overhaul.
And this really signals Wipro making a big push into insurance third-party administration, or TPA.
Exactly. Managing core insurance operations for another company, that's a specialized area, potentially very sticky and profitable if they do it well. A real strategic move.
Definitely an aha moment there. A big bet on the TPI market. What else stood out?
Well, there was an expanded relationship with a US-based payment card services company.
Fewer details on that one.
Yeah, but the focus was on modernizing and maintaining business apps, aiming for better security, scalability, cost efficiency. Pretty standard but important modernization work in finance.
Makes sense. And they also extended relationships with a big U.S. energy corporation and a North American parcel delivery company.
Right. Again, less detail, but it shows continued trust from major clients. The parcel delivery one did mention private cloud solutions
Ah, interesting.
and using AI ops, that's AI for IT operations, to improve ticket resolution, cut outages, using AI to make infrastructure run smoother.
AI keeps popping up. The partnership with that European food wholesaler also mentioned it, right?
That did. Phase 2 of that deal is about boosting cloud security and using Gen AI for incident detection and resolution.
Gen AI, generative AI, using it for IT tickets.
Apparently, and also using data insights for strategic decisions. So another practical application of Gen AI, not just hype, moving beyond chatbots to actually fixing IT problems.
That's another aha moment. Okay, what else?
The Australian engineering and construction company expanded to a managed services contract. Again, automation and AI ops to improve user experience, cut costs, similar theme.
And the multinational engineering corporation deal.
That one was specifically for AI-powered managed InfoSec services, network, endpoint, cloud, identity security.
And they mentioned integrating AI from Wipro's WGA Studio.
Yeah, presumably some internal Wipro AI platform. The goal, a 15-20% boost in agent productivity through automation and smarter alert handling.
That's a specific, measurable goal using AI. Impressive.
Very. And lastly, the U.S. utility company partnership, setting up a whole Gen AI center of excellence.
So not just using AI, but building a capability around it.
Exactly. Developing a Gen AI strategy, building an end-to-end resource planning platform using it. Sounds like they're embedding AI quite deeply for logistics, power management, asset health. This seems less about fixing current issues and more about building a future-proof core.
Really leaning into AI across the board then. Okay, shifting gears slightly.
Whoa.
Wipro also made an acquisition in Q4, Applied Value Technologies, AVT.
Right, for about $2.8 billion.
And AVT does.
IT consulting, focused on digital transformation, supply chain, business process consulting.
So this looks like a move to bolster their consulting side.
Yeah, it should augment their application services, bring in more specialized consulting expertise, and hopefully drive some new growth.
And the deal structure. There was goodwill mentioned.
Yep, provisional goodwill of $1.3 billion, mostly tied to the value of AVT's workforce and expected synergies within IT services.
And that goodwill isn't tax deductible, you said.
Correct. It's an asset on the books, but no tax shield from it. The deal also had deferred and contingent parts.
Meaning part of the payment depends on AVT hitting future targets.
Exactly. Keeps everyone motivated for a successful integration.
Okay, let's quickly break down performance by segment. IT services versus IT products.
We touched on IT services revenue being slightly down for the year, $190.9 billion or $10.4 billion.
In IT products.
That saw a bigger drop, came in at $2.7 billion, at about $31.5 million, down from over $4.1 billion the year before.
Why the drop in IT products, do you think? Market shift? Strategy?
Could be lots of things. Maybe clients moving more to cloud, less need for on-premise products. Or maybe Wipro's strategically de-emphasizing it to focus more on services.
And we should also mention that reorganization they did back in October 2024.
Oh, right. Merging some sectors. Technology and communications came together.
And energy, natural resources, utilities merged with manufacturing.
Yeah, into energy, manufacturing, and resources. They restated the old numbers to match, so comparisons should be okay. But it's good to remember that structure changed. Probably trying to align better with clients or find synergies.
Makes sense. And within IT services, performance varied across the different regions. Americas 1, Americas 2, Europe, APMEA.
Yeah, we won't go into every region, but the overall slight downward trend for IT services for the year holds true across the mix.
Okay, just a couple more financial points to touch on briefly. Finance expenses, finance income.
Both fluctuated year over year, quarter over quarter, reflecting their borrowing, investing activities, interest rates, things like that.
And income tax expense also moved around, obviously linked to profitability and tax rules.
Right. And all that feeds into the net profit and EPS figures we already covered.
Finally, they always include notes on forward-looking statements and accounting policies. Anything significant there?
Well, they mentioned several new accounting standards and amendments that aren't adopted yet but could have an impact later. Things related to foreign exchange, financial statement presentation like IFRS 18, etc.
And they're still assessing the impact.
Yeah, standard practice. Are there any of those changes analysts are particularly watching for Wipro?
That's a good point. Sometimes changes in presentation standards like IFRS 18 can draw attention just because it might change how numbers are shown or compared year to year. But yeah, they're still evaluating.
And of course, the usual reminder about estimates and judgments.
Always important. Revenue recognition, impairment tests, valuing acquisitions like AVT, pension plans. Lots of areas where management has to make estimates that affect the numbers.
Absolutely inherent in accounting.
Okay, so let's try and wrap this up. What's the big picture takeaway for our listeners?
I'd say it's a picture of pretty steady net income growth, strong profit performance, really, fueled by those margin expansions.
Yeah, and those big strategic deal wins definitely stand out.
Right. But that's happening alongside a bit of caution in the overall market, shown by that slight dip in the core IT services revenue.
So they're navigating a tricky environment, it seems, but managing profitability well.
Exactly. The focus seems squarely on large deals, looking after their top accounts, and really investing in key areas, talent, consulting, especially with that AVP buy, and clearly AI capabilities.
Which brings us to our final thought for you, the listener, to chew on.
Considering this performance, the strategic wins, the margin focus, what are the potential long-term impacts? Especially from this big push into large deals and new ventures like that insurance TPA business.
Yeah, how might those big bets play out, particularly with ongoing global economic uncertainty, the fast-changing tech landscape, and all these investments they're pouring into things like Gen AI?
That's the billion-dollar question, isn't it? What does this mean for Wipro's trajectory over the next few years?
Definitely something to think about. We encourage you to dig into the full reports if you want more detail, and consider what these trends mean for the wider tech services sector, too.
Thanks for joining us for this deep dive.